Morning, guys. Happy Friday. It's June 13th, Friday the 13th. Matt Bennett is here. It is 5:28 a.m. Central Time. Grain markets are mixed this morning. We had a USDA report yesterday, guys. Why don't we start with that?
So the report featured no major surprises. As many traders expected, USDA increased its projection for old crop U.S. corn exports, resulting in a lower U.S. old crop carryout projection. Despite a friendly report, corn prices were unable to rally. USDA also increased its projection for new crop U.S. wheat exports. The U.S. soybean balance sheet was left totally unchanged versus May. The marketplace was underwhelmed by the report and is perhaps more focused on U.S. crop prospects.
All right, Matt. Friendly-ish corn number. I mean, the carryout number slightly below the average trade guess. Let's go to this U.S. corn ending stocks to use ratio. The projection now for old crop is 8.9%, tightest since the 2020-2021 marketing year. We've had higher stocks to use ratios and traded corn on the board north of $7. Here we are this morning. July corn's at 435. D's corn is in the mid fours. What the hell is going on, and why is the market not trading these balance sheets?
It's incredible this morning, Joe. Whenever you say everything you just said, and then you look on the board and you've got crude oil up $6 and corn's down $3. I mean, it's almost like the big money players are saying, "Hey, we know something that everyone else in the trade doesn't know, and corn's not worth owning. We don't want to own it. It's not part of anything that we want to have any ownership in." And clearly, you had 150,000 short last week. Probably looking at something north of that this week. But what's going on in the corn market? I think one of the biggest problems, of course, is, that Brazil had a pretty darn big safrinha crop. And it seems like people are concerned, that you're going to see exports maybe back off. I mean, that's one of the things I've heard. The other thing, of course, is you got a big crop coming. I mean, that's what everyone
Do we?
feels
Are you
like.
sure?
That's what everyone feels like.
Are you sure about that?
No, heck, I've got a bet with you. 176.5 or under, which I don't know. After driving out to Iowa last week, I don't know if I feel as confident in my bet, but
you're gonna lose, bro.
I may lose. Hey, you know what everyone says? We got a lot of acres and this crop looks fantastic. And then the 2-week maps pretty much every day are like, hey, on out farther, we might get a little drier. And some of my good friends have said that in the weather business, and I don't envy them. It's just like calling the markets. But
I'm just joking.
Right now,
I have no
around,
opinion. I have no opinion on the corn yield, just for the record.
Yeah, I know. I mean, it's way too early to know. But basically, to be honest, it makes no sense.
Okay, look at this. This makes further less sense. So world corn ending stocks to use ratio projected for the current marketing year to be the tightest since the 13-14 marketing year. And the new crop situation, despite everything you said about Brazil, despite the projection for big U.S. crop, is supposed to be even tighter than this year.
I know. I mean, you looked around last year.
Make it make sense, Matt.
It doesn't make sense. I mean, it really doesn't make sense. I mean, I guess you can look around and say, hey, wheat hasn't been able to find a bid forever. And, there's going to maybe some cheap feed wheat. I mean, Russia's got a lot of wheat, but still, this corn thing makes no sense whenever you look, especially at the U.S. fundamentals. Then you go over to world. Last year, there was a slide I was using of all of our major competitors. So Brazil, Argentina, Ukraine. I mean, nobody had any corn. In the corn market, and we're still sitting here. Yes, the safrinha crop was bigger than what people thought, but you come in here right now, and you would think with a stocks to use under 9% that the market would be $1 to $1.50 higher than where we're at right now.
At least.
Exactly. It makes no sense.
All right, let's go to crude oil.
So crude oil prices trade sharply higher this morning. The most heavily traded August 25 WTI crude contract traded nearly 12% higher at one point overnight and continues to trade sharply higher early this morning. Tensions in the Middle East escalated sharply after Israel launched major strikes on Iran, damaging key nuclear and military sites. Iran confirmed damage at its Natanz facility, but reported no radioactive or chemical contamination. Analysts warn that any disruption to the Strait of Hormuz, through which 20% of global oil passes, could have serious global implications if the conflict expands.
Massive crude spike. It was up 12% at one point overnight. We traded up to almost $75 in this August WTI. That's fresh highs for the calendar year. Peel it back, look at the monthly. You went up and traded just above some trend resistance for a second and then backed off. Big deal or no deal, Matt. I mean, the grain markets a lot of times, at least in previous years in my career, would sometimes react to stuff like this, and now they just don't.
Exactly. I mean, we're kind of continuing with a theme, it seems like here. Obviously, in the past, whenever we've seen some sort of global conflict that impacted the price of energy, many times the corn market would participate in that sort of a rally. Boy, it's like someone's getting out the defibrillator device on this corn market, and they've hit it 2 or 3 times, and it's just there's nothing there, But yeah, I don't know. This thing, is it a big deal? Is it not a big deal? I mean, you're launching missiles at Iran, and supposedly they were trying to build a nuclear bomb. I'd say it's the global tensions are going to be pretty tense here for a little bit.
Yeah, I mean, that's what they do in the Middle East. They fight, and this happens
Exactly.
a lot. This is an especially large move. So I guess we'll see how it plays out. Speaking of other things that should be rallying the markets and are not, let's go to the U.S. dollar.
The U.S. dollar tumbled to a 3-year low on Thursday. The Bloomberg Dollar Spot Index fell by roughly 0.8% to its lowest level since April 2022. Meanwhile, the euro surged to its highest level since 2021, and the British pound climbed to a new 3-year high. The dollar's recent decline has been driven by concerns over tariffs and economic uncertainty. Economic data released on Thursday showed producer inflation holding steady and jobless claims rising. Together, these factors have heightened expectations for the Federal Reserve to cut interest rates. The Fed's next policy meeting is scheduled for this coming Wednesday.
A seemingly friendly or even bullish item, dare I say, that, again, doesn't appear to matter for our grain prices.
Yes, exactly. Yesterday, Joe, like I said, like you said, 3-year low here. First of all. Second of all, if you would take this thing down, Split and I were talking about this a little bit, take it down, I don't know, 96 or so, you could start getting on some longer term support as well. And then he felt like you could take the thing down to 88. If you did something like that, then maybe you find some life in this just lifeless corn market. But absolutely a cheap dollar, especially when everyone's saying, hey, you know what, we're going to back off on exports. Brazil's got corn to export. This week's sales weren't great, let's face it. But overall demand this week was pretty freaking good. Whenever you look at corn usage for ethanol, it was fantastic. I mean, 112 million bushels, I believe, somewhere in that neighborhood. But yeah, you would think that a cheap dollar would be something that would really be good towards our exportable commodities. But yeah, once again, you can't get anything going.
I just feels like nobody wants to buy the stuff until they see a bullish or dry weather map or forecast, and it's just not out there. Let's go.
Question for you though, Joe. Yep. Okay, let's say that you do come out of this weekend and people are like, okay, now hold on. These maps are turning drier. And then a week from Monday, you see maybe a little bit of a revision lower in crop condition ratings, which I hate crop condition ratings, but regardless. And a week from Monday, it's a pretty ominous forecast. What kind of a rally would you pinpoint on the corn market if you can't get a rain from the 20th of June until the 20th of July?
It'll rip like it normally does, and the magnitude of the rally will have to do. So the funds will cover their short, right? So they'll go from net short 150,000 to even maybe long 100,000. How much farmer selling is there? How much farmer selling comes in to offset and counteract the fund buying and short covering? Farmers aren't sitting on much old crop. I don't think there's much out there. Yeah. Are farmers going to get aggressive with new crop sales when it's dry in their backyard? Probably not. You could tack 50 cents on it in a week.
I agree.
But we're not there yet. Let's not get the people excited. Let's go.
No.
So precipitation across the Corn Belt was mixed last week. Rainfall helped ease drought conditions in Northwest Indiana, Northern Illinois, Southwest Michigan, and Northern Missouri. A lack of precipitation caused conditions to worsen in parts of Iowa and Minnesota. In the high plains, rainfall was scattered, bringing drought relief to Nebraska, southwest Kansas, and the Oklahoma Panhandle. Conditions deteriorated slightly in central Kansas. When we look at the percentage of U.S. areas experiencing drought, corn country 18%, soybeans 13%, winter wheat 15%, spring wheat 20%, and cattle country 20%.
Even where it's dry out west, and then there's some parts of, northern Illinois, northern Indiana where it's dry. I feel like what I've heard is that, hey, we've got a couple of rains. We're in okay shape. Like, yeah, it's drier than normal, but it doesn't seem to be a catastrophe to me.
No, I think it's the only thing that you've got to be cautious of this time of year is you kind of got to spoon feed some of these people that
Right.
don't exactly have a lot of subsoil moisture. And so where this gets interesting is that, a lot of times in my career, it seems like if you had, I don't know if I want to call it an extreme, but if you had a weather pattern going into like the 4th of July, so maybe you've been wet all spring, it seems like one extreme certainly follows another. And a lot of times you break around that pollination time frame. Most of your forecasts are trying to still bring it into the west. And again, I mean, I don't know. I talk to Snodgrass every week, almost every day, but every week, and he says, hey, everything's set up, but we just are missing one key ingredient. And I talked about this with you on Wednesday. It's the Bermuda High that's off the East Coast. If it moves north, you're probably looking at some sort of a high pressure ridge setting.
Can you please explain the Bermuda High in detail for us?
No, I have no freaking clue. But it's this mass off of the East Coast. Then there's the cold water off the West Coast. I mean, I'm real technical here, but it's set in place. And typically, when you have a pool of cold water off the West Coast that goes up towards Alaska, you really struggle to get northwesterly flow. What's breaking that up is the Bermuda High. If it moves north, we're going to be in big trouble here as far as getting moisture in the Western Corn Belt. So I don't know if drought sets in. These people that are getting spoon-fed moisture, if they don't get it with no subsoil moisture, it's going to be problematic.
The forecasts are not problematic. So
I
you look
agree.
at the next 5 days, there's a little bit of rain around. There's actually a little bit of rain on the radar this morning. You look at the 5 to 10 day period or the 1 to 10 in total, and there's too much rain in too many places. And the market, whoever it is, whatever fund desk is sitting on a big corn short, this is not enough to scare them away, I don't think.
We've got good looking crops and we've had enough moisture, but Joe, these 2-week maps have been showing 3 and 4 inch totals. We have not gotten those the last 2 or 3 weeks. We've had like a half an inch or an inch. We're not hurting. Okay. I'm not complaining about moisture. I do think some of these maps get a little carried away with the volume of rain.
Oh, sure.
And so I think once you start underperforming, if you underperform in enough places, it could be an issue. But let's be clear. If this crop continued to get the same moisture that we've had all along, it would be a 180 crop. I'd feel pretty confident in saying that.
Here's a couple of maps from our friends at Crop Profit using the overnight GFS run. U.S. corn areas over the next 7 days expected to see 160% of normal rainfall. And this is just one model run, but certainly not bullish. A little bit less rain during the 8 to 14 day, but still pretty close to normal. So there's not a weather threat right now. And maybe that's the big take home for the entire corn market and everything we just talked about, is that there's just not a weather threat. And therefore there's a huge degree of disinterest.
Yeah, I agree. I mean, I agree with you. I think the thing about it for me, there's no weather premium. Okay.
Yeah.
But it's shocking with the fundamentals that we have that we still don't have a base higher than where we've got. And I know people are frustrated with it, but you know what? The market's going to do what the market's going to do. And sometimes you just got to grin and bear it. And that's pretty much what we're resigned to right now.
You know what? People love to hate on the USDA. It's USDA's fault that the prices are lower. This is an instance where USDA is telling you, hey, this thing's pretty damn tight, and the market is not cooperating. So whose fault is it now, Matt?
No, I agree. I agree with you. I do think, that, there's been a lot of chatter about USDA leaving some stuff out, that story that came out last week. So people want to say, oh, the USDA is trying to screw us or whatever. But I agree with you. I mean, guys, you could not paint a more bullish fundamental picture than what they've painted, because essentially what they're saying is, yeah, it's tight for old crop. Plus for new crop, you need to see one of the bigger acreages we've ever seen, first of all, along with the largest yield we've ever seen easily. And that will get you to a 1.75 whenever, hey, your stocks to use with a 181 yield is not going to be burdensome compared to historics.
Mhm.
And so they've thrown you a bullish set of scenarios here,
Yeah.
and the market's just like, who cares?
And we got some biofuel news pending, potentially, maybe.
So the EPA is set to announce new biofuel blending requirements today, which are expected to cover 2026 and 2027. In early April, a coalition of U.S. oil and biofuel industry groups met with the EPA to recommend raising the 2026 biomass-based diesel blending target to 5.25 billion gallons. The recommendation is well above the current quota of 3.35 billion gallons. The EPA is expected to propose a blending requirement below the level recommended by the coalition. The coalition also called for total federal biofuel blending mandates, including both corn-based ethanol and advanced biofuels, to rise to 25 billion gallons in 2026.
So the coalition wants 5.25. The whisper number that's out there, I think the last I heard was like 4.65. So this was seen as being bearish, but this is also old news that's being recycled at this point. We just haven't seen the headline yet.
Yeah, I mean, essentially, it's better than where we were, but it's not as good as what some people wanted to see. 5.25 by all means. I guess maybe some of my thought process, Joe, is that maybe you're looking at if U.S. and China have a trade deal, right? Supposedly, and I think that's going to be bankrolled as really good, for U.S. products. Okay, and then on the flip side, maybe your RVO isn't going to be quite as solid as what you want to see. I've got a little bit of an issue with that as far as the way that we continue to lose world export share. I'd like to see more domestic resources, in my opinion, because bottom line is we're going to continue to lose exports to Brazil, period. I mean, that's all there is to it. And so, I don't know. Do you want to use your own products here in the U.S.? I mean, that's what we talk about all the time. And so I don't know. It'll be very interesting to see what their, commitment is to that.
Yeah, the talk was that it's out today. We don't know. It could be a month from now. It could be 3 months from now. Who knows? Export sales.
U.S. corn export sales were near the lower end of expectations last week. Net corn sales were reported at 31 million bushels. The print was down 16% compared to the previous week and 33% from the prior 4-week average. Japan was the largest corn buyer for the week. Net soybean sales came in below expectations and fell to a marketing year low at 2 million bushels. The print was down 68% from the previous week and 74% from the prior 4-week average. Indonesia was the largest buyer. Net wheat sales for the 25-26 marketing year, which began on June 1st, also fell below expectations at 14 million bushels. The print was down 13% from the previous week and 44% from the prior 4-week average. Mexico was the largest wheat buyer for the week.
So USDA again acknowledged the better U.S. corn export program yesterday, second best program of the last 10 years. Could end up being the best before it's over. Do they need to come up more with the export projection, Matt? Or are we fair? Or are we fairly estimated now?
I saw a pretty cool tweet from Karen Braun yesterday, and she said that, when you're 95% or over the USDA's estimate for June, that basically 7 out of 8 years, you've ended up above the USDA estimate for June. And so you would assume that there's a very strong possibility, considering we're 96% of yesterday's number. Yes, you had the ammo to probably go up 75 to 100. They could have done that. And who knows? I mean, I get it, the going up 50, but I think you'll see another 50 this next month if instead of 790 or whatever we did this week, you end up with a couple more 1-1s and 1-2s. And I do think with a weak dollar, you've got the chance to see those things happen. I mean, these exports just continue to be very, very impressive.
All right, we've got some ICE news.
Yep, the agricultural industry is feeling the effects of immigration enforcement. On Tuesday, an ICE raid at Glen Valley Foods, a small meat processing plant in Omaha, Nebraska, led to the detention of more than 70 workers. The meat processor is now operating with less than a third of its staff. Similar raids have been reported in California, impacting fruit workers across the state. According to the USDA, over half of approximately 850,000 crop workers in the U.S. are undocumented. On Thursday, USDA Secretary Brooke Rollins said President Trump is exploring various options to support farm workers amid these ongoing raids. However, she noted that most of those changes would require action from Congress.
Labor is a big problem in rural America. and this probably doesn't help. I think a lot of this is more out west than it is maybe in the Midwest, but still.
No, that's for sure. And I mean, let's be clear about it, Joe. There's certain jobs that it seems like a lot of people just don't feel like they want to do anymore. And in one way I'll explain it is when I was a kid, we used to bale hay and put in the hay mow every year. And then we got to the point where we couldn't get uh, teenagers, young people, if you will, to come help us bale hay because why? They didn't need the money or bad enough. I don't know. We couldn't hardly ever get any help. And so we decided to get away from squares, and a lot of people got away from small squares as the same thing, because they couldn't get any help because,
Mhm.
it was too easy not to work. And so there's a lot of people that want to come here and work. And so I do hope that there is some sort of a work program here because there needs to be.
Don't construe anything that we just said as any sort of political
No,
commentary.
I mean,
Please. It's Friday. I'm tired. I don't want to deal with it. All right. What did cattle do yesterday?
Cattle futures were mixed. Live cattle were 12 cents to $1.07 lower, with the exception of the front month contract gaining 37 cents, and feeders were 45 cents lower to 77 cents higher.
Where's the cattle market going, Matt?
good question. I mean, you keep trying to get convergence and you just can't see the futures catch up with the cash market that's absolutely on fire. And so, I'm just going to stand where I've been all along. If you're worried about your risk and you want to stay bullish, set a floor in under yourself,
Mhm.
and stay bullish if you want. But the bottom line is if you own cattle, and I don't care whether it's a freaking 3-day-old orphan calf, it's worth a lot of money. It's just incredible what these cattle are worth. And so if you've got a lot of cattle, then you got to understand what your risk factor is, because as we've seen twice, whether it's the situation of the packing plant or whether it's screwworm, the gate's not big enough to let everyone out. If you have a certifiable issue, you're going to see a massive liquidation. Now, fundamentally, it's still strong, but I just stay protected.
Outside markets, we've got some movement this morning. The Dow's down 480, the S&P's down 67 points. Treasuries are mixed. U.S. dollar is sharply higher, erasing some of the losses from yesterday. Crude oil still up sharply. We're up at $5.83 in the July WTI at 73.86. Have a great weekend, guys. Matt, thanks for joining us. Back on Monday.